Welcome to the Filogy Finance tutorial series. In this part, you can see the final result of the recorded investment and purchase transactions in Filogy reports and graphical diagrams. Summarize what has happened so far. You have invested $1,000 of your personal property. Then you made two purchases, one bicycle for a discounted price of $100, and more 4 bikes for $150 each. In the WordPress dashboard, you can see the Filogy status box. The indicators always show up-to-date information about finances of your whole web store. Click on any indicator to see more detail on graphical diagrams. I click on the cash flow indicator. All the values listed here are shown in the diagram. You can change the time period. You can see the details of all the other indicators by clicking on them. Let's see the payables. Here are the descriptions of the diagram data. Now, try the financial reports. To do this, you need the Filogy Reports plugin. Move your mouse over the Filogy Reports menu, and then you can choose these financial or inventory reports. First, I click on Balance Sheet. It relates to a specific date. Select this date and provide some other parameters for the report to run. Press Run Report button. The balance sheet appears. But what can you see on the balance sheet? The balance sheet has two sides. The left side shows what you have, the right side shows what is the source of it. The source can be a creditor or an owner. The left side is called Assets. It can be, for example, cash, receivables, products in stock, or an equipment of the business. The creditor part of the right side is called Liabilities. It is the debt that your business owes someone. It can be, for example, a bank loan or an unpaid invoice. The owner part is called Equity. It is the wealth of the owners in the business. Equity can be an investment of an owner or profit that the owner leaves in the business. The totals on both sides must always be the same. Let's go back to the balance sheet report in Filogy. You can see the Assets, Liabilities, and Equity sections here. The total amount of assets, that is $1,000 now, always equals the total amount of liabilities, that is 0, plus equity, that is also $1,000 at this time. So the sum of the upper part and the lower part is equal, both are $1,000. The assets part shows you that you have $300 cash, the inventory value is $700, so this is a total of $1,000 assets. The liability is 0, so you have no debt. The owner invested $1,000 into the business. This is shown in the equity section. You can drill down and get detailed information about any low-level row in the balance sheet. Just click on one of the account name links marked with blue. This time, I'm curious about the details of $300 cash, so I click on Cash Account. A new page is displayed, explaining how the $300 was calculated. The page contains the year-to-date account entries of the cash account that you selected. Notice that the difference between the total debit and credit is exactly $300, which is the cash amount you are looking for. In the list you can see that the opening balance is 0, so no cash comes from the previous period. Your cash amount is increased by $1,000 on January 4th. This was the investment of the owner. Then your cash is decreased because you paid $100 and $600 to the supplier. That is why you have $300 cash now. I'm curious about this manual journal entry. I can drill down again and see the business document of this specific entry. The source document appears. You can see the $100 of cash entry on this document. I choose Profit and Loss Statement. This report shows your revenues and expenses during a specific time range. I set this month as a time interval. You can see that there was not any kind of revenues and expenses in the given period. The next report is the cash flow statement. It also relates to a specific period. Define the period. I select this month now. Press Run Report button. The report shows that you spent $700 on goods in the inventory, and the business got $1,000 as owner investment. The total net change in cash is $300. You can see the inventory account entries that caused cash flow to change. You can also drill down here to see the subsequent documents. Just click on the blue links. Here is a detailed list of the inventory account items involved in the change of cash flow. The next is the inventory report. You can select a specific product, or you filter the product name or SKU, then press Run Report button. I'm not recording any filter data. The list contains only bicycles, because the other products have no data for this period. You can see the in-stock quantity, which is the quantity of items which are currently in the inventory. The committed quantity, which is the number of items that the customers had already ordered from you, but has not been delivered yet. This quantity is in stock but not available for the other customers. The ordered quantity, which is the number of items that you have already ordered from a vendor, but the vendor has not delivered yet. The value is the total value of the in-stock items. You have two drill-down options. Click on a value to display the inventory audit report, or the name of the product to display the WooCommerce product page. The last report we're looking at is the inventory audit report. Select one specific product, or just click Run Report button to get all the products. The inventory audit report contains information about inventory transactions. You can follow the time course of inventory changes in each product. The transactions are in chronological order. The transaction type shows that the goods have arrived or went out, or what kind of other events are happening. There are two main groups of columns. The one contains the movements that show the change of values in that row. The following column group shows the resulted state in the row. In the first line, you see that some goods come in. This is exactly one bicycle, so the in-stock quantity movement is 1, and the resulted total in-stock quantity is also 1. The inventory value is a total of $100, because it is the first received bicycle shipment in your inventory. In the second row there was an order of 5 bicycles. The overall ordered quantity is also 5, because no order was made before. In the next line, 4 bicycles come in. The unit value is $150, so the total value is $600. The total in-stock quantity is 5, because there was already 1 bike in the inventory before this transaction. The total in-stock value is $700, because the original value was $100, which is increased by $600 now. Since 4 ordered products have arrived, the number of products ordered decreases by 4. So, there are currently 1 product being ordered from the original 5. Only 4 of the 5 ordered items have been delivered. The missing one is no longer delivered by the supplier. This last line shows that a missing 1 item of the order has been closed. The ordered quantity decreased by 1, thus the original 1 decreased to 0. So, there is no open order at this time. Each line shows the original document of the transaction. Click on the blue links to view these documents. In this tutorial, you've seen the results of purchases made in the previous 2 parts of this tutorial series. Financial indicators and charts have provided online financial information about your store. With Filogy reports, you made detailed statements about your business, such as balance sheet, profit and loss statement, or cash flow statement. You track your inventory using the inventory report and the inventory audit report. You have only purchased, but have not sold anything so far. It's time to produce profits. In the next part, we'll see a sale process. Thank you for watching this video, and don't forget to subscribe to our YouTube channel.